Okay. YouTube, yes. We seem to be live. Let me double check. Just triple checking that everything is good. I think we are live right now, but let's make sure.
Live on YouTube or just everywhere?
I think just in general. All right. Either way. Uh, oh, it is. Yeah, I just got an email. Yeah, it is. This should be awesome. Yeah, we're live. All right. All right. I am double checking. Everything looks good on my end. Audio levels I think are good. I made sure my microphone levels are good. You sound good. All right. Um, well, welcome everyone. Tonight's a pretty cool night. I'm glad we got you live during. If you live in the northeast of the U.S., I think also like I'm assuming I guess like eastern side of Canada. You should be able to see if you go outside and if you don't have too many lights around, you should be able to see something called an aurora. I think that's how you say it. And it's yeah, pretty much. I was able to go outside. You can't see it as at least from where I am. I'm in Massachusetts. You can't see it too much with your eyes where I am, but you can if you take a picture, it looks really cool. So definitely. Although I don't recommend leaving the stream if you haven't checked it out, definitely do go do that. Having said that, my name's Carlos. Who do I have the pleasure of sharing the stream today with? Yeah, Kushagra's been a longtime friend of mine. We met in college, and yeah, he's gonna help me add a little bit of perspective to some of the stuff that we're gonna talk about later in the stream. But yeah, my friend he's from India, and well, that's one of the topics we're gonna talk about. What's going on in India right now, especially get a nice outlook on probably one of the most exciting economies in 2024. But without further ado, let's get started with let's just check what the market's doing in general. How about we start with that? Um, before even doing that, I want to look at something interesting. So, as you know, the last FOMC meeting basically signaled that there's probably not going to be any interest hikes, but that there probably won't be any interest rate cuts anytime soon, at least, which many analysts were expecting something, I mean, I think analysts were expecting at least like 3 cuts or more this year, something like that. And now the expectation is like barely one later this year. So again, these things change pretty frequently, but that's kind of the expectation right now. Yep, that did not happen. But yeah, one interesting thing that I wanted to look at, I feel like a lot of people I feel like people think that we're gonna just go into the stratosphere after like rates get cut, and historically that's actually not the case. So right now, if we have data going all the way up until 1971, so we have a good amount of data. So what are we looking at? We're looking at the U.S. interest rates on the left scale, which goes up to like the highest rates we've seen so far go up to 20%. And right now, so let's just put into context where we're at historically. So right now we haven't seen rates this high, and by this high I mean like 5.5%. The last time we saw rates close to this high was in let me zoom in a little bit so you can see what I'm talking about. Here they were at 5.2% in so yeah, like 2006 pretty much. So like for like the second, yeah, for like Q3 roughly of like 2000 oh no. Yeah, like around this period basically, we had slightly lower interest rates than we had now. So basically we're at sort of historic rates in the sense that, it's slightly higher than what we've done for like over 20 years. Um Having said that, it's still we didn't go above the rates that we saw around like 2000. And, it's just interesting to keep that in mind. But what do we see here? So, like, let's look at what's happened before. So, from 1981 to 1983, there were like pretty intense rate cuts. So, like, we went from like 20% all the way down to, what was this, like 12%, and then we went back up to like 15, and then we kept going down to 8%. So like a pretty big reduction in rates. And actually markets dumped for like for like a good chunk of that interest rate cut. And then when was this? So the pivot for stocks was around here. So yeah, like pretty much like stocks didn't stocks dumped for most of this cut, basically. And it was a pretty big cut too. Like I said, here we have another cut from, what is this, August of 1984, and cuts. Interest rates were cut, and then actually markets pumped, interestingly, which doesn't seem to be the case often, because if we go again here to interest rates from, what is this, like 1989 to like early 90s, we cut rates again from like almost 10% to like 3%. And actually markets kind of rallied for the most part. There was a pretty sizable correction here from like 370 to like 292. This was from the 90s. Yeah, from like 90 to 91 there was like a pretty big correction, but aside from that, markets not only recovered, but then they put in several all-time highs, like pretty much week after week. Oh, this is a monthly chart, so like month after month. So this was interesting. Basically, markets did pump after rates were cut. Then rates kind of held for like a long time, and then markets just kind of went up even harder. Then here, rates were cut. What is this, in the 2000s? And then rates were cut from 6.5% to 1%, and markets dumped the whole time, like the whole fucking time we were dumping. And then here, rates went back up to 5.2% roughly, and then after the cut, again, markets dumped really aggressively too. Also, these were like recession years, so like it's to be fair, like this, for example, like the previous one was in the 2000s, so like the tech bubble, the dot-com bubble and stuff, and then like here was like 2000, between 07 and 08, so the that recession. And what else? So right here, we have another rate cut from like 2.5. We went all the way down to like 0.26. And here, interestingly, if you ignore, so in my opinion, I would ignore this dump, because this is the COVID dump. This is February. This is early, like early 2020. So yeah, I would ignore this. This is a black swan event. So I would just say that markets went up, even though we pumped, we turned the money printer on, and that was part of the reason, and blah blah blah. But I would say like markets went up while interest rates went down. So pretty much, we don't know what's going to happen, obviously, but it's not certain, like that interest rate cuts are going to bring markets up. There's also another chart that I want to look at here. So if we look at this chart, this is the global liquidity, this line right here. And then right here, this is the S&P 500. So, and this is the 2-week chart. So what do you notice here? So right now, if we overlap them, like this is the COVID dump. So again, we ignore this. You could say like markets went up as global liquidity went up, and then they corrected as global liquidity corrected. But the interesting thing is that we've kind of been not following global liquidity since like late 2022, pretty much. Like we kind of like not even, like I would say like 22, yeah, like Q2 of like 2023, we kind of just started diverting and like not following global liquidity. So right now, global liquidity is going down. And what do I mean by global liquidity? For those that don't know, it's like a lot of the combination of like the assets of different federal banks and across different countries. And yeah, like this is a little concerning, at least. You know, if I had to say, you know, what I think about it, it's a little concerning, definitely, because this is a clear downtrend in global liquidity. So unless markets start printing again, like in general, like countries start turning on their printers, not just the U.S. Um, this might struggle a little bit. That doesn't mean that the stock markets won't pump. They have been. We've been setting all-time highs and stuff since what was it? Since like basically since we started this year, we've been putting in all-time highs. So this is just it's a thing to keep in mind, pretty much.
Like global liquidity, like overall increase, you know, you look at a perspective of like 20 years.
Yeah, let's do that. So zoom out, zoom out, zoom out, zoom out. Zoom out here. So the data we have for global liquidity goes all the way up to 2007. So let's look at that. So pretty much, if you see, it's it usually it's you know they seem to follow together. So what is this? This is the I would assume this is aftermath of the 2008 recession. This is March 2009. So yeah, I would assume this is the aftermath of that. And then global liquidities kind of started going up since September of 2008, and then it's kind of been going up. I mean, it's been going up even from this period on, but it went up pretty aggressively. I would assume this had to do with the bailouts of the banks and whatnot. And then yeah, this has been pretty much an up line going. You know, it's like markets have been kind of following this pretty, pretty aggressively. I would say, like I would say, just that this is the latest deviation. So I would say this deviation either markets are going to correct down and follow global liquidity, or global liquidity is going to go up and then propel markets even higher. We'll have to see what happens, but yeah, it's a cause for concern in my opinion. At least. Mm-hmm. Where 20. Mm-hmm.
Overshooting, it might like start like correct later down the road.
Uh,
Oh, yeah, that like wave that's like going on.
oh wait, Kush. Give me a sec. I'm being told that your voice is very low. Let me increase that. Oh yeah, let me so make sure that the audio levels are good on my end. Say something real quick. Oh, actually, your audio is not coming through at all. Let me make sure. Let me double check that. No, yeah, let me just double check that the audio is set up and going through the correct channels. Ah, it is. It is not. That's why. There we go. I think so. Yes. Yeah, Kishan was texting in the chat that your voice is very low. All right, yeah. Yeah, let me know if
Is that something that like can potentially that happen? What do you think in terms of S&P rectification? Do we see that?
by the way, your audio was still not going through. Yes, now it's going through. I double checked.
Oh, now it's
Yes, awesome. Yeah, so let me repeat what Kush was saying. So he was asking that if I think personally that global liquidity needs to go back down to COVID levels, which is kind of where the money printers were turned on. Honestly, that I would, like it sounds like a nice. It sounds like it would be nice for liquidity levels to go down there. I don't know if we will go back down there, just because I don't think the Fed was gonna let markets go down that hard. Honestly, I'm not sure. I don't think, because remember, like, this isn't just like M2, like other countries printed a bunch. So like
Right.
you'd have to assume that like other countries are also gonna fix the bullshit, all the stuff that they printed. So,
Yeah.
which I don't think is gonna happen. I think, for example, places like the UK are toast. Places like I mean, Europe in general is like unless they do drastic things, like they're kind of screwed. China's probably not doing too hot in terms of some economic factors.
Mm-hmm.
Yeah, like that's I don't know. I don't foresee, like, in general, um all countries just like suddenly being like, all right, let's get our shit together and, like, fix whatever we printed, like, from COVID onwards. Like, I just don't see that happening. I just think we're gonna I just think we're gonna probably we're not gonna see any rate hikes or anything like that. I just think at some point we're gonna see some rate cuts, and then markets are gonna pump for a little bit, and then we might see some type of like correction for like maybe a few months, but I don't think it's gonna be anything worse than that, personally. Um,
Mm-hmm.
but yeah, having said that, let's see what else do we have in store. Um, we actually the I wanna we've looked at the top market indexes. I want to look at Bitcoin real quick. Just it's kind of what I trade for mostly, but kind of just reiterating on the stuff that I mentioned on the last stream. But pretty much, um, I think that Bitcoin right now has been struggling to get out of this downtrend right here. So let me zoom in so you can see it. I think it's developed this formation, by the way, for this. I'm tracking this line all the way down here. It's from like October of 2023, which is roughly when we started pumping. And you could say that the bull market started more or less, towards the end of last year. But yeah, if you look at the top we established, the recent top we established, which was 73K, almost 74K. We've been kind of just ping ponging. Well, not ping ponging, but like it was pretty clear that we were going to hit this area again, and we did hit it. And actually, it was right above the bull market support band, which, for those that don't know, bull market support band is the 20-week SMA and the 21-week EMA, which usually we don't go under it during bull markets. So I'm expecting that to hold true. Although it sounds too simple and like too fairy tale to like actually be the case, but like I wouldn't be surprised if this was like the local bottom and if we're gonna like go up a little more. The only thing that has me a little bit worried with Bitcoin specifically is that this you see this line, this slash line here. This is a clear downtrend, like, right now. So we've been in a clear downtrend from like early April. And even though it looks like we might be starting to get above it here, it's still going. It's still. I need to see more up action. I need to see like the price hit like the middle of this triangle, at the bare minimum, for me to like feel that it's gonna at least test this higher range here where I drew the emojis, and then obviously we need to see, like, if I were playing this, like, right now the way I'm playing this is I have a limit order to buy a little bit here in this zone here. And then if we go to the, let me open up the weekly. This is, let me find Bitcoin here. So yeah, if we go under the weekly, I have a second. I think I talked about this last stream, but just bring it up real quick. So I am waiting for, like, this would be like my, oh, sorry. This would be like, I think we're at bare minimum, we're going to swipe this area again. So this would be somewhere like 59K 300 something. So I'm pretty sure we're going to swipe this area. Like, I don't think the whales are going to let us off that easy.
So is the zone where you have those emojis, is that like where you definitely gotta buy? Or if you reach the higher band,
Where
you
you,
are basically like make money?
yes, like where I would sell like for like a short-term trade, basically. And
Got
then
it.
and then here, so I would say this is probably my worst case scenario right now. If we do continue swiping down for like another week or two, I wouldn't be surprised if we go and try to test something like this is the 53-day EMA. which seems to have
So
some.
what is an EMA?
EMA, exponential moving average. So basically,
Okay.
like the if I recall correctly, like it just means that the last few values have more weight than like older values, I think, or I think like swings, like wilder swings, like have more weight, something like that. Like it's more reactive, basically. But yeah, so the reason I set the like kind of the same pattern here, like I just drew two lines from like these bottoms here to see like where would be a potential like space to like snag some Bitcoin, and then I looked at the volume candles horizontally from like the move up, so from like end of last year until like the top that we had in like at 70, almost 74k. And if you look at the volume bars, basically under this pattern, the biggest volume volume area is like here around like the 51k mark. So that's why I'm considering setting my stop loss either here or maybe like closer to this big volume bar, because I don't think it would go like under this too much. I think there would be volume, like there would probably be limit orders and stuff to pick this back up, or I would assume that whales would probably want to buy this again, this area. So yeah, that's kind of what I'm looking at in terms of like if Bitcoin does crap itself a little more, then those are the two levels where I'm looking at. So this would be like 55k. So like either 55, yeah, like between 55 and 56, and between 58 or 59. Those are like the levels that I'm looking at for Bitcoin to potentially swipe before we start going up again. And one quick thing to give like a market, like a nice little markets check. So I like to look at the stablecoin dominance. So especially the this is the calculation, by the way. It's the
Oh, before we jump into this, I don't know if you covered like the Bitcoin halving that was gonna happen, right?
what do you want me to
That
do?
already happened, right?
It did, yeah. It already actually. There's a chart that I like to look at the end of videos, but let's pull it up
Okay.
now. So yeah, these are the Bitcoin halvings, and we just had our Bitcoin halving. Actually, I think it was April 20th, so pretty funny there.
Yeah.
And yeah, so this is just a chart that I like to look at to chill out, pretty much.
Okay. So each bands are basically when the halving
Yeah, so
are from one
each
halving
of
to
the
the next
black
halving.
bars is a halving, and since we just had one, usually price for like the following, like few months, it ramps up. Although usually, one interesting thing, if you look at the like the month after the halving, it's usually pretty boring. Like actually, this month was a dump. This month didn't really do anything. It went up, but it was like barely. Here it was a down. Technically, it was a down candle, but it just didn't do anything. And then here, same shit's playing out. We're not. It's boring, basically. Like we swiped 59k, and then we just kind of been struggling to get back up. That's kind of what we've been doing. But
So
yeah,
do you
like
think like already included, like the market's already included like any potential upsides of halving at this point?
I think that the reason we put this is not directly answering your question, but I think it answers it in a roundabout
Yeah.
way. I think that the reason we put we put a new all-time high before the halving was simply because of the ETFs. I think ETFs were definitely gonna bring a big amount of inflows, and even though those have calmed down for the most part, it's still pretty significant in my opinion, and it's especially once GBTC stops dumping, and once the Hong Kong ETFs, for example, like start ramping up more, and we get maybe we'll even get an Ethereum ETF. I don't think we're getting that anytime soon. I think that might be like a end of year to like next year type of thing. Which if it does happen, I think that's when altcoins that might be the time when altcoins actually do have their season. If you say or like that's when Bitcoin dominance might start to calm down. So like right now, some of the content creators that I'm following, like some of them think that Bitcoin dominance is probably going to go up a little more for now, and I mean, it could. Like,
Yeah.
we don't really know. I think it might also I think it might just chop for a little bit. I don't know if it's gonna go up a lot. I think with the amount of altcoins that we have in the market at this point, I just don't see it going up that much more. And also like meme coins have been much more like there's been a lot more money than I expected going into meme coins. Like this, it's a pretty big like if you see WIF, for example, like the market cap for that, it's ridiculous. Like it's in the top 100 already, and it's like only a few months old. Like it's crazy stuff that's going on. But yeah, so what I was gonna say here with the stablecoin dominance is something I like to keep watch every week. Pretty much, we've been in a downtrend, and a more pronounced downtrend for stablecoin dominance, which corresponds to uh, bull trends basically. Because obviously, if as people are getting out of stable coins, they're getting under risk. So right now, during the latest dump where we went to 59K, like this tells me that the 59K might have been the bottom, simply because I really don't expect us to deviate too much from this line again. I think it's probably just going to keep going down and propel markets forward, but we will see. Again, like I said, I'm still expecting us to either swipe the 59 or even maybe swipe the the 56K ish range. So again, don't be careful with leverage. Don't be stupid. Have some cash on always have some cash on the side, for buying opportunities and whatnot. But yeah, so that's Bitcoin. These are, I'm not gonna go too hard into this, but pretty much I just wanted to also point out something interesting. So let's look at the daily. Actually, I want to look at the daily for all of these. So recently, Bitcoin has been dumpy while the S&P 500 has been going up recently, which I find interesting. This is another, I find this bullish, especially because of like the biggest narrative I think in 2024, maybe even carrying on to 2025, is that institutions want Bitcoin. And if institutions want Bitcoin, institutions also are already in the S&P 500 and stuff. So I think that the ETFs are going to make Bitcoin even more correlated with stocks going forward. I don't think that it's the opposite. At least not yet. It's definitely going to be like, I think, more correlation going forward. There was also the worry about like gold and the dollar going up. So like recently gold's been on a tear, although it's might be chilling out. We'll have to see. But obviously if gold goes up, we don't usually see Bitcoin going up. And if the dollar goes up, we also don't usually see Bitcoin going up. And they've both been going up, which is interesting. I think this points towards uncertainty in the markets, and also just general sentiment, I think, is also kind of crap going into the summer. I mean, like the recent CPI data was like not very good, although I've explained why I don't think that's as bad as people think. And unemployment, I think, was getting a little worse. Did it get worse? Actually, I think we had higher.
It did get,
It did? Okay.
yeah, it did get worse by a bit. I don't know about the latest data, but I know like a month back, yeah, it was kind of cooling down.
Okay. All right. Well, I guess let's take
So
a
like,
break.
do you think it's like more applicable for Bitcoin, or do you think it's even applicable for like,
What is?
I don't know, like Solana or even like Ethereum and like basically the whole crypto market in general?
What's applicable to that? What do you mean?
The fact that there's not a correlation between, so you said, right, like typically when gold and US dollars increase, there's the chances of Bitcoin also increasing, the price of Bitcoin increasing
Are
is
lower, yes.
usually, yeah. So like, do you think that that's also applicable for like the other kind of coins as well, like or Ethereum or Solana or something
Oh
like
yeah,
that?
definitely. Like if Bitcoin isn't going up, Ethereum isn't going up, and therefore the rest of the altcoins are not. Like it's just
Oh,
that
okay,
is
okay,
that simple.
okay,
Yeah. No, yeah.
makes sense.
Bitcoin is the driving force. Like if Bitcoin isn't, if money isn't flowing into Bitcoin, you might have you're always gonna have like random projects that pump for X and Y reasons, but it's not going to be like, they won't be sustained pumps usually. Like
Got it. So you think it's like Bitcoin's always like an early indicator for such
I
things, right?
I don't think it's a no. I wouldn't say it's an early indicator. I would just say that right now, even though gold is up and dollar is up, like the fact that they're both up, I think that maybe hey, my friend Ruben is in the chat. Maybe like maybe the correlation, it shouldn't be paid attention to Bitcoin like too much. So like, because I think that both of these being up shows a potential, it just shows uncertainty in the markets, and like basically like I would say I'd be a little more worried. Oh, I also have another friend in the chat. Nice. What's up, bro? Yeah, it's Stranger Clicks. Yeah. Sorry. What I was trying to say is that I think that if only one of these was going up, so let's say that gold was going up for some reason. I mean, we know why gold is going up. Places like China are buying gold. They're buying a fuck ton of gold because, you know, they don't want to rely on the US dollar as much, and also they know that the Chinese dollar is not doing very well, so it's not like they can rely on that too much too. And they're not going to rely on Bitcoin because I guess that's their stance. So yeah, I think that that's one of the reasons why gold is going up pretty hard. One of the reasons why the dollar is going up, I think, is just in general, we have a lot of countries around the world that have these shit currencies that are just devaluating into oblivion. And you know, like instead of getting into Bitcoin like some other places are doing, like they're, you know, the first step, I would, you know, obviously would be to move from your shit currency into a less shit currency, which would be the dollar. So yeah, like I think that I just think that these are separate things that are playing on, that I don't think necessarily mean that we're getting out of risk. I just think that the situations in different countries around the world is giving way to this, and it doesn't necessarily mean that we're getting out of risk. I mean, one way to tell is that, you know, we're setting new all-time highs in the stock markets, for example, and as we mentioned, like global liquidity is also going down. So I just think that there's just like many reasons to be uncertain about different economical factors, and they don't necessarily mean like, oh, risk is going down as well. It might mean that there's a recession going, like that might happen at some point in the next few months to like, or maybe even next year. Like I said, if there is some kind of broad market correction, I don't think it would last too long.
I don't.
But yeah. Yeah, it's a pretty good overview. Let's talk about like more general, instead of like looking at charts. Let's take a nice have a nice change, and we're gonna look at some stuff. So as I mentioned earlier, my friend Kush is from India, and as you guys know, in 2024 we have a lot of elections going on. I think Taiwan had their elections recently. I think there's been a couple. I mean, we're halfway through the year already, so I think there's been a couple countries that have had their elections happen, and India is going to be the biggest election, I think, ever. Right? Can you talk a little bit about that?
Like 970 million people gonna participate this time. At least, you know, they're eligible to vote. So it's gonna be probably the largest election that has happened, that has happened ever. I think the last one was basically the last Indian election, but
So yeah, like you said,
yeah,
970
that's gonna
million
be a
people,
huge.
which is a lot of people. Like
It is a lot of people, and I think that's why they're conducting elections in phases. So it's basically gonna have like 7 phases. I don't know if you want to just pull up one of those Wikipedia links that I'd sent.
Which one?
The Wikipedia link that I'd sent about the Indian election thing. So
I have it. Yeah,
um,
I have it right here. Can you send
oh,
it to
okay,
me?
okay. I can't see your. I wasn't able to see your screen. That's why I was like, okay.
Oh, you
But
can't. You can't see it.
maybe it's already in. Maybe you're already like showing it. Yeah, I'm seeing a different screen. That's fine. Uh, But yeah, no, I can see it now. So yeah, basically
Okay,
like
nice.
yeah, I just hopped onto the stream to just see it. I don't see it in the Twitch stream, by the way. That was but anyway, so yeah, like 970 million people. If you like scroll down, we have, you know, almost, yeah, I think there's a lag, so I can't really see what you're showing to the
Wait,
people or in the
wait,
screen.
which section? I can double check what's going on my Discord.
I can see the US dollar index, S&P, Bitcoin,
Oh, my bad.
and then the
I
gold.
have it on the wrong screen. My bad. Let me share the correct screen. Yeah, let me just. Sorry, I was sharing a different screen to you.
Oh, that's fine. That's fine.
Okay, let's go. Okay, now you should be able to see it.
Now I can see it. Yep,
Let's
yep.
go. All right. So yeah, where do you want me
Yeah,
to
so like, so basically, like, yeah, if you scroll down, I think, the election schedule, or sorry, if you scroll down by a tiny bit, the I think, because how massive the election is going to be. Yeah,
Here,
just scroll down a bit. Yeah,
here
yeah,
it
yeah.
is. Yeah.
So yeah, so essentially, the elections are going to happen in like 7 different phases. My parents are gonna vote on the last phase, basically, and a few of my friends kind of have already voted, and so yeah, it started on 19th of April. It's gonna continue all the way till 1st of June, and after counting and everything, we're gonna know hopefully uh, around 4th of June of 2024. I think sometimes it takes a while, but usually with the way how polling works with the EVM machines, you can probably like get to know around the same day. So I'm not sure like how that process works, but typically around that time frame is when we'll kind of get to know. Yeah, and like that's like a biggest democratic exercise that's happening. So and like why this is crucial is because we're at a very interesting phase geopolitically, right? And with different sort of takes that might happen, I think this election will pave the way to for us to understand, like how who's going to be the leader, which I think is very evident who's going to be the leader at this point. I think it's still going to be Narendra Modi here, who will probably like take the win here. And once that happens, I think we'll kind of like know, okay, what's how is India shaping for the next 5 years, and what it also means is what's the opposition, right? How are they gonna you know basically fight, or how are they gonna really react to this win? I think the question is not, personally for me, I don't think the question is not if Modi is going to win or not, but the question is by what margin is he going to win?
Yeah.
Um, and
Actually, you had shared something interesting so that people can understand like
yeah,
why
yeah,
we're
yeah,
saying that. So yeah,
yeah.
like
Let's go. Then.
which is kind of wild given that. So I like I said, I'm in Massachusetts, so I'm in the U.S. Look at our current president, Joe Biden. He is at 37% approval
37%.
rate, which is garbage. Um, Modi is at 77%, which is insanity. And given the size of your guys' country, like that's insane.
Yeah, yeah, yeah. No, he's done a amazing job in terms of like his PR and like him like making the right moves, and also I think the major talking point is the fact that there has been a nice um, sort of shift in terms of poverty levels. Also, I think in terms of economy as well, I think India, when I think he was elected, India was like the 10th largest economy. Right now, I think it's the fourth
Is it?
or the fifth, if I'm not wrong. I think it just like became the fifth or so. I think it might be fifth, if I'm not too. Yeah, you can probably like look that up there.
Yep, India
It is
number
fifth.
5.
Yeah.
Yep.
Yeah, and so
Damn,
it's kind of like
that's interesting. You guys are behind Germany. That's damn.
yeah, so it's Germany, Japan, China,
Damn, the
and
UK. Damn, you guys passed the UK. That's kind of hilarious.
yeah. India passed the UK. I think earlier last year, I think, or maybe couple of years back. But yeah, we're like basically we've had like a good growth, I think, despite COVID pandemic hitting us, and then the demonetization
I mean,
that
that
caused.
that move that you guys did with the Russian oil, that's been a big one, I think.
Yeah,
That's
for sure. I think
sorry,
Indian.
the Indian oil, my bad. Should call it.
Yeah, exactly, right. So,
Hey.
yeah, I mean, I don't know if people know this, but like, yeah, basically, I think there was a time when India was importing crude oil. I think they're still doing
They're
that,
still
but
doing it, right?
India
I
basically,
think.
yeah, I think they are. I've just
I
not
would
heard
assume they're
anyone
still
talk
doing it,
about it
yeah.
lately, so that's why I just think they might still be doing it. But yeah, like they're importing like crude oil from Russia by like various means, and and so, but then like countries like Germany and some other European countries, they're basically like buying that labeled oil from India because they're refining that oil and exporting it. And at a point, I think some month last year, I think they became essentially the net exporter of oil because of the scheme. Or Yeah, so eventually, there are these like very crafty and nifty ideas that I think India has done like a good job in terms of like making sure to like take the best of like a certain economic advantage, and rightly so, just doing like what's kind of what they think
What
will
needs to be
help
done,
like
yeah.
feed like so many people who are basically living under the poverty line still. But yeah, no, there have been those moves that they've taken, which is definitely a bit controversial and to be honest, a bit funny too. But yeah, I think for the next thing, why I think the other factor why this is important for India's economy to like still grow is a to like help out basically the people that are there, but also at the same time what's really impeding this economy, right? Like some of the things that people have been talking about is the GDP growth, right? Whether it can sustain itself the way how it's been growing at like 6 to 7%. Um, and I mean, there was a slight downtick. Uh, Actually, it was a big downtick during COVID, but generally, I think since so let me actually also give you a history, right? So India's economy was liberalized, very similar to how China's economy was liberalized.
What do you mean by
In
liberalized?
So there was a in China, for example, Deng Xiaoping, right? Like I'm probably like butchering the name, but he basically like was okay with like foreign investments and foreign companies coming in and opening up imports and exports, like just trade in general to like other things. What India used to have, I think he started basically around 1978 ish or something like that, right? India had done the same thing in 1991. And what really used to happen in India was that, hey, if you want to do a business, if you want to open a factory, you need to have a permit. And that was colloquially at that time like known as the permit Raj. Raj is just like, a thing that it's very hard to describe how I would say Raj, but it's more like a sort of a way that you would have that the permit who gets the permit was heavily controlled.
Okay.
So there was, because India was a socialistic countries with a lot of heavy socialistic ideas. Many of the from banking to other, from like airlines to like many other businesses, including telecom and everything, was all like owned by the Indian government. Right. So later they allowed privatization to happen, right? Promoted more economic activities, promoted more entrepreneurial ventures as well, invited more foreign direct investment, and then opened up their economy. That was like basically the bigger thing in 1991. In fact, the funny thing is, one of the ex prime ministers of India, Manmohan Singh, he was the one who sort of like crafted that whole and led and saw that you saw making opening up the whole Indian economy in 1991. And the funny thing is, at that time, India had barely money left for like I think a week to import oil or something like that.
Damn.
So yeah, so from 1990s to like seeing how it is here, it's nice to see. But I think for a country overall, I think a lot of work still needs to happen because Sure, our GDP is great, but GDP per capita is still needs to be, I think, like it still needs improvement. I think we're still like not growing. I mean, we are definitely growing, but the numbers are like still, comparable. Not that comparable to like how our total GDP shows, obviously because of the population. But regardless of that, I think there's a cohort shift of like the people who are living below the poverty line actually like increasing. So there are those sort of data that have come up, and there have been some controversies around like those data collection processes around collecting like poverty numbers. Um, uh, but like regardless of that, I think that was an interesting thing. But overall, I think what's really now important is how India is going to see itself for the next, few decades, right? So it's got an initial momentum. And I think one of the key things now that they need to consider is that if they want to build their infrastructure, improve manufacturing, I think these are the two key pieces that India is going to look at. Now, to improve infrastructure, what do you really need? You gotta really invest into building like good highways, good roads, uh, and what do you do? How does a country do that, right? A country sort of like offers something called like sovereign bonds, and so any country like the U.S. also offers like certain bonds, right? That has a certain yield to it, and India also offers similar sovereign bonds uh, to like carry on these massive projects that they're gonna do. Now, one of the challenges that India has been facing has been around the credit ratings that some of the um, some of these companies like Moody's, Fitch, and S&P actually. Yeah, so these guys have been sort of not being very kind, I would say, which is probably an understatement here. Um, uh, in terms of like giving them a good rating, because if you want to pull up like one of the charts from that I sent you from Bloom Ventures,
Oh
I
yes.
can like show you why this is important.
Uh, from Bloom
I think it's
Ventures.
this one. Yeah, yeah, yeah.
Okay,
So
yeah.
here, if you go to like page
There's a bunch of pages.
9, I think.
By the way,
Yeah, page 8.
we have an interesting question in the chat after you're done with this part. But yeah, the somebody asked what's India's government stance on cryptocurrency?
Uh, yeah, it is definitely not uh very friendly. I think they do want to have some level of control
Which is
over
interesting
it.
because you guys have like created some of the biggest like companies to come like from crypto, or at least like some of the biggest projects like Matic,
Yeah, Polygon being
yeah,
one.
Polygon, yeah, like the whole Matic network is some as an Indian creation, you could say. Um,
Yeah, 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 for sure.
I forget what other.
But like, yeah, right now I think the way how the sentiment stands, I don't know if this report covers. I can like give you a bit of a background, but like, uh, from my understanding is, many companies are just setting up a lot of their, if they're a crypto company because of regulations and everything. Uh, I've been like hearing a lot of companies just setting up something in Singapore or Dubai, which are more friendlier towards crypto-based companies, especially in terms of taxation, governance, etc. So yeah, India has been a bit hawkish. So I don't know personally. I don't know if they're gonna like change any stance regarding that. I don't know if they're gonna like make it friendlier. I really doubt that, honestly. But I think they launched their own currency in a way, like digital currency, which is called e-rupee or something
Oh,
like
like
that.
a CBDC,
Wait, what was that?
a CBDC, like a central bank digital currency.
Uh, Maybe I'm not familiar with that exact
I
term,
know that
but
different countries have been like testing some like projects, like some pilot programs and stuff, but I don't know if it's like coming anytime soon, because that's gonna be kind of, I don't know. It's like you know, like the US dollar is already like a shit coin, and like you can say that all the if you look at it in terms
yeah,
like by fundamentals and stuff, like if you compare it to like other like altcoins and like Bitcoin and stuff, like US dollar as a
Yeah,
shit
yeah.
coin. And
Why don't
so
you Google digital
uh-huh.
rupee? I think that might
Oh
tell
yeah.
you.
Dig-
Maybe you can like take a look at it and like see if that's what's resonating with you more.
digital rupee coin.
Yeah, there's no point. Yeah, it's just digital rupee. Yeah, so if you just pull up the Wikipedia of that, I think that will tell you. Yeah, so this is what they were trying to like play around with. Uh, yeah, the Wikipedia link. Yeah, that should be fine.
The EINR is a tokenized digital version of the Indian rupee issued by
As a
the
CBDC, yeah, that's what you were saying.
Yep,
Yeah.
yep, CBDC. Oof. Woo, dystopia. But yeah, so let's go back to what we were talking about. Yeah, that's a great question. But yeah, like the last time I heard about anything about like regulatory stuff from India was that they like were trying to be a little more careful about it, but it doesn't seem like they're going full like, oh, let's ban it and stuff like other countries like Morocco or like I mean, the U.S. isn't banning it, but like the we see the SEC handing out Wells notices like like it's candy to like
Yeah.
crypto companies. Like Robinhood just got a Wells notice, I think, which means they're about to get sued. So
Yeah.
yeah, it's
Yeah.
just dumb stuff
Yeah, I
going on.
think I don't see any, like positive or them being less uh regulatory about like, cryptocurrencies there or just that whole market in general. So if something opens up, I would be pleasantly surprised, but I don't think, that's gonna happen.
By the way, where do you want me to go here on this Bloom
Oh
report?
yeah, yeah. So if you go to page 8, so Bloom Ventures is like, one of the VC firms in India, one of the really popular ones. And they every year since last year, I think they put out this report which just really, brings out some of really nice insights. Um, so the reason why I brought this up is because what I was saying is, if you look at this is India's GDP versus China's GDP, right? So these are like maybe some distribution in terms of like how their GDP is proportioned into, right? So one thing that you like, what's the thing that stands out to you, Carlos, in this graph, right? That's very different.
Well, I was looking at the table in the bottom that like the industry section is like much smaller in
Yep.
India, and that services
Mm-hmm.
are roughly the same.
Yeah, yeah, yeah. And then if you look at those the graphs up there, right? The bar graphs.
Hmm
What do you think is like different?
It seems that so private consumption is rough. It's almost double. So that means that like consumers are spending a lot more money in India on stuff
Hmm.
than in China. Let's see. Gross capital formation. Uh, it's a lot higher. It's a good amount high, like a little higher in China. Let me see what else.
Yeah, so like I mean I wanted to like make you pay attention to gross capital formation, which is
Okay.
basically gonna be, as I mean in terms of percentage terms, it's almost as the difference of private and yeah, about like how the difference is with private consumption.
Yeah, can you explain like
Um
what does that mean? Like the gross capital
Yeah, yeah,
formation.
yeah. Yeah. So gross fixed capital formation, to like put it simply, right? Imagine you have your business, right? You are trying to, or imagine you're a country, right? Let's
Hmm
say it's Carlos country, right? Carlos is gonna basically now, what's the first thing you want to do? You want to maybe like build some roads, right?
hmm
For that, you can employ certain group of people. You can get like tar and coal and whatnot, right? All those raw materials. You need to like churn some cement. You need to churn some concrete, and you need machineries for those, right?
hmm Yeah.
So the gross fixed capital formation is basically like when you have these fixed capitals of like machineries or different, you know, other machines that you want to use, other products that you want to use to build those infrastructure out, or such projects that the government is sort of carrying out, right? It doesn't really have to be machineries, but like anything that's basically can you can consider them as a fixed capital, right? How much is so the gross fixed capital formation is just talking about how much is India spending into buying such machineries that will help them to improve their production capabilities,
I see.
right? So what happens with now gross capital for yeah? So what happens with gross fixed capital formation is that if this is low, right, compared to like China being at like 43%,
Mhm.
this just means that China's capability to like build something is going to be much higher because they already have like a lot of investments done, and they are generally like more prone to doing more or aligned with doing more investments towards buying something. So if I have like uh, if I want to give you like, okay, I want you to build a bridge connecting from point A to point B, China will already have like many machineries and different sort of utilities or other kind of utilities that you want to get compared to India, because India may not have as many machineries that they have invested in, right? And so what's so why am I mentioning like gross capital formation, right? So I think the main thing is the way how when I talked about like these sovereign bonds, right? So the sovereign bonds are something that India issues, and then the countries either try to buy it or sell it in their secondary markets. But generally, I would want to buy India's bond over the US's bond because I want to get some benefit of like this money, because India would, after like 20 years of like building a project, one of the mega projects that's happening is like building a bullet train, for example. So if India wants to like spend money into like the bullet train, they will offer these bonds, right? And then once they offer these bonds, they make a promise to you that they'll pay you X amount of interest rate, after like 10 years or 20 years down the road, right? So the higher the interest rate, the more expensive it is to actually do that project, right? Um, because ultimately in 10 year down the road, you are paying more and more interest, and that sort of impedes the capability of India to go ahead and like build some projects. So this is like why I feel like one of the things that India is sort of trying to do, because there's a lot of development that is like happening in terms of infrastructure projects, that this is now kind of becoming a pain point for them. And this is where I think I sent you the link there, that the Indian government basically came up with their research report in terms of yeah, that one, uh, in terms of like whether the sovereign credit rating by these three agencies are actually okay or not, right? Are they really justified? And so I think one of the key things that if you could even before we even jump into that, if you could even show the tab on the left here,
This one.
right? Like given how the India's economy is, right? Like India is like nowhere to be seen in like the top economies there, and this is like sorted in terms of the ratings.
Yeah.
It's among the leagues of like Kazakhstan, Panama.
Like it's all the way down here. Yeah.
It's worse than Peru.
Like Australia and Canada and Denmark are up here, and like yeah, we have to go all the way down here to go see
Yeah,
them.
yeah,
Like
yeah.
triple
So I don't
B,
know where Greece is.
triple
Okay,
B
Greece
minus.
is like,
Yeah,
yep, exactly. So
yeah, like
so
it's just a little bit above Greece, which is kind of insane.
yeah, yeah. So like it's the whole thing is that
Like
I mean that's
Kazakhstan, like bro, how
uh,
does Kazakhstan, like obviously not trying to shit on Kazakhstan or anything, but like what, how does Kazakhstan or like Mexico, like a much smaller place, than like India, have like a better credit rating? And that's it's kind of nuts.
yeah. So I think that's the argument, right? Like that India's trying to make, which is that, hey, I think politically we are a bit stable now. Economically, we are doing much better since the past like 20 years. And we did like get an increment, but nowhere in the history, right, has it happened that the world's fifth largest economy, even China, when China was the fifth largest economy, they were rated so poorly. uh,
Yeah, even China has A plus.
yeah, China has A plus, like
Which
right now, and you could
honestly,
argue,
like
yeah.
if I were like, if I had to give ratings, I don't, I'm a little surprised that China has a higher rating than India.
Yeah. I mean, I think they say, which is not something that's very obvious to us, or it's not very clear, because I think these credit ratings agencies, they try to like abstract a lot of things in terms of how they show, how they give away these ratings, essentially. and most of the things are very much like qualitative in nature, um, than quantitative. But like, hey, as a country, they can only argue for the quantitative data that they already have. Um, right. So that's the point. That's the point that, like, hey, like we're a growing economy. People are bullish about us. Right. 20 years, 15 years down the road, things might look even better than what it is today. And like let's look at like what does triple B minus mean, right? I think I sent you one of those links. I think if you go to the tab on the left of that,
Yep.
this is where I saw from where it's like
Triple B minus
basically
here.
triple B minus just means like good credit quality with a very with like currently low credit risk, and the next level bottom to that is speculative elements. So if you're not, it's just above, you're just not, you're barely not speculating, and that's like the next level, which is like, okay, you have like the
it's decent, but there's risk, basically.
exactly. And that's where I just feel like,
Which
it's a bit
would you say
unfair.
we're past that point of like do you think that, because I don't know, like at least from my personal experience, like I've been to India and like you can definitely tell that like there's a lot of growth going on. Um, this might sound a little weird, but like you can tell that a lot of growth is going on by like how bad the climate sometimes seems to be in some areas, like because you can tell that like growth has been favored over like the environment in some areas, and like it's normal.
Yeah, yeah,
It's normal, like India, countries like India and China had their start later. Like that's just what's gonna happen. Like it's not something you can do
that,
much about. You know.
that's a very valid point, right? So that's why we need, like, India needs money essentially, or a better way to offer these sovereign bonds, um, to like fund all these projects. I think if you like Google, I think India's renewable sources, like India's electricity, it's like 30% or something. I don't know if you don't mind just Googling that. I think India's, in terms of electric,
What do you want me to Google?
um, yeah, growth right now, in terms of, just do like India. Um, let me also just Google it.
Yeah. Go for it. Growth rate of what?
No, I just want to see how much electrification is coming from like renewable sources. Uh, yeah, how much of India's electricity is renewable? So
All
yeah,
right.
so 40% of the energy capacity is already like set to be like renewable. And yeah, and this is like, the world's third largest renewable energy producer is India.
So yeah,
Right. So
here for example, renewable energy investments have been just go. Oh, this doesn't even include 2023.
it
So
does
yeah,
not. Yeah, yeah, it
and
does not.
it's
But
been
like
going up. Yeah.
it has been going up, right? And so, as you pointed out, right, like we need development, but we need cleaner development, right? Like something that's sustainable. And like, when to be honest, like, the government has been like working towards that. There have been so many startups that have come up around like renewable energy, and just harnessing that whole ecosystem in a way. And so, and it has a lot of potential. I mean, like, solar powers, like efficiency is just like, a matter of efficiency with time, in terms of how much, I mean, one is harnessing the solar power, and then the second part is just transmissions, right? So once they improve the transmission, it's just a matter of time, I feel like, right? But the one thing that's going to impede this is, again, going to be the credit rating, so that if India wants to like build some of these things, if they don't have to pay so much interest, right, on building out these projects, this would really help them to even like build out more and kind of like catalyze, in a sense, right? So yeah, so like that's the whole argument there. And like, if you look at, if you go back to that paper that I was showing you the thing that the Indian government like released.
Actually, regarding what you're talking about right now,
Yeah.
we have somebody in the chat that said, "What are your thoughts on this? Elon Musk was anticipated to unveil an investment ranging from $2 to $3 billion in India, primarily aimed at establishing a new Tesla factory." Let me open up a link here.
Yeah. I mean, Elon Musk has definitely visited. I think, Elon Musk being Elon Musk, like, he being super popular, he garners like a lot of I guess attention when he visits. But yeah, like even before, in terms of it'll be interesting to see. I think the main challenge for Elon Musk and Tesla has been that India is gonna leave, like it's they're gonna like use, or they have like some tax laws where like most of the things that is in the part, basically most of the components of the car needs to be built in India so that it's not taxed at a higher bracket, right? So it's less expensive and you sell it back in India.
So do you think
So
Elon Musk is
I
looking
think
for like an exception or something to that?
yeah, and I don't think he was getting an exception, because I think there were talks since 2016, 2017 of like of Tesla actually trying to like build something in India and come into the Indian market. um but that's not been the case yet. So I think commitment has already happened, uh but you will see slowly. I mean, what I'm seeing here is that he's also gonna like he's discussing with some of the space startups as well. So that'll be interesting if some of those 2 to 3 billion is going to also get invested. Well, it says mainly for building, so like there might be some things, but yeah, like I think in terms of investments, I don't think India is going to have a thing. But in terms of renewable energy, I think I'm more than Elon Musk. I'm seeing a lot of like indigenous companies coming in and like trying to like build um, uh, basically like some of the major components to make renewable sources of energy happen.
Honestly, I'm pretty bullish on India, dude. Like if you had to ask me like which one, China or India, I would say I'm probably a little more bullish on India right now, just because uh even though who knows when like and China's like real estate market is gonna collapse, like they've been saying it's gonna collapse for a long time and it doesn't, but it's clearly not doing well. And not just that, like there's a lot of other concerns with India. Sorry, not with China. Um,
Yeah. I mean,
so
if you look at the population pyramid, right?
it's
Like
yeah, like
that's all.
that's exactly what I was thinking about. Um, and yeah, like it doesn't look very good, like long term, unless there's a lot of changes. And I mean, like not just that, like if you look at the investment climate and like where companies are want to establish their production lines, they're moving out of India. I keep saying India. They're moving out of China,
Yeah.
because they just don't feel as comfortable setting up shop, new shops at least in China versus like going to places like India, going to places like
Mhm. Mhm.
maybe like Vietnam or like Bangladesh or something like that.
Yeah, Apple's producing a good amount of
Yeah.
their phones in
I,
India now.
I think 1 out of every 10 iPhones was made in India, like the like last time around or something like that. So it's changed. Like things are changing. Things are changing.
Yeah. Things are changing. I think as you said, like manufacturing. Now the thing is, like what's really impeding this change has been the credit rating system, right? And I think if this improves, I think obviously this is not the sole factor, right? In no way. Like there are multiple reasons what happens, but I think this is something that is a fair thing to sort of ask for, uh, right?
Yeah.
Uh,
I think
and
I
so
would say so, yeah.
yeah, and like if you open that, yep, if you open that report there, over here, this is the graph that I was showing, which is that when a fifth largest economy sort of came in, right, when China entered, it was rated as A, I guess, yeah, A. The way how I'm reading, yeah, it was A by Moody's, and S&P rated it as A minus. Um, However, like and then it kind of like was pumping up. I'm not sure how to read that, but also towards the end, if you see when India entered as a top five economy, its rating was not as they weren't as kind with India in terms of the ratings.
Yeah.
So that was that, and then also if you look at page 93, just go to page 93 there. I don't know if that's aligned with the actual page, but let's just try to go there. Oh, I think yeah. Just scroll down a bit. Just scroll down. Like okay, that's page 87. Yeah. I was just going by that. So scroll down. Uh, yeah. Let's look at that figure 5. There. Right. So this is just like a trend line that just shows. Okay. So what? So let me just tell you what this report did. Right. So,
Yeah.
the Ministry of Finance, I think, basically just worked to create this report and just saw that, okay, on various parameters that Fitch, Moody, and S&P sort of say that they judge a country upon to give out these ratings, they considered most of them, and they try to like put in how India is an outlier to their general trend of how they rate other countries. Right. So if I'm looking at the figure 5, right on the left, you can see there's generally a trend line, which is that, hey, if your GDP growth rate is higher, you're gonna have a higher credit rating score, right? So yeah, so on the y-axis you have like basically the average rating, which is, the bottom is like a lower rating, the higher is like a really good rating, versus the GDP growth is on the x-axis, where on the right you have like higher GDP growth and like how does the credit rating increase. As you can see here, like India basically just lies on way below towards the bottom line, basically sitting out as an outlier in terms of their GDP growth.
Yeah,
And
it's on the lower end of like the ratings, but it's also like
yeah,
on the higher end of. So I see it's on the way higher end, like it's one of the highest of like GDP growth, and CPI inflation is also a little higher. It's like a little above 4%.
yeah. And so technically, if you were to read that, right, someone with a CPI of 4% should at least still have a rating value of like 2.5 or something like that, right? Somewhere around that.
And India's at 1.
2.4-ish. India's at 1, yeah. So those are like certain examples that I think they're talking about. There's also, if you go to page 96, figure 17, that was, yeah, another one. Uh, yeah, so this is where, you could see that, yeah, there is a general uptick of in terms of GDP growth, and they like try to see the cycles among how India's has been, but like since 2005 to, since 2000 to 2020, India has been hovering around that, like, that region basically.
Yep.
Which also like brings to say that if things have changed since 2000,
Why doesn't this
why
change?
hasn't
Yeah,
this, really changed?
I see.
Right. And then if you go to like page 99, figure 29,
Which page? 98?
99. Yeah.
99. This one?
Yeah. Yeah. If you just go, well, that was going to be another thing, but yeah, we can look at
Which one? This
that
one?
one too, which is, yeah, which was that, hey, like, I think this just means that in 2010, ease of doing business in India has improved a bit. uh, and if you look at 2020, ease of doing business in India has improved, but that hasn't really accounted for an increase or a bump in terms of their average rating.
I see.
So yeah, so that's one of them. And then if you scroll down, I think the figure was 29. Yeah, so that's another thing that you kind of see that. Like, I think one of the questions that you may ask, right, is that has India defaulted? Is that why, like, Fitch, Moody, and S&P aren't really like giving India a higher rating? And that's like not the case, right? Like,
Yeah.
India's never defaulted. It's never been like an exception in terms of not being able to like pay their bonds and doing their due diligence. So, that's also not the case. So that's another reason why, it's in so many parameters. Basically, there's
It's
a
time to
case
bump
study.
up the ratings, basically.
Yeah. And so that's where everyone's kind of appealing. The chief economic advisor of India is appealing. Uh, the finance minister has also talked about it and expressed her unhappiness with this whole situation in some of her interviews. So I don't know. I think there is a very strong case of like why this is important, and the reason why again we're appealing this is because if the ratings improve, right, we don't have to pay, instead of like paying 7% for the interest, right, we're just gonna have to pay like, let's say, something like 6%, right? And that 1% difference is just enough to like create another big project overall in India.
Pretty much.
So that's how it's gonna, right now I think this is one of the bigger factors which are impeding. There are other socioeconomic factors. I think women participation in the economy is very low. I think it's like 20% of women in India actually participate in the whole labor force. So that also needs to improve. The government is trying to like, create some schemes, but it's too early to say whether it's going to work. But I think there needs to be some aggressive action there as well, so that there is a higher number of women participation. But I kind of did want to like touch base upon this because this was something that was interesting to see how it's not to discredit the credit rating agencies, but you can see some level of distrust, at least from my perspective, with some of these credit ratings. And
No, yeah, like
when I
it
think of
definitely
like
seems like
looking at
it's
what
time to
their reports say, let's say.
maybe like increase the ratings at some point soon.
Yeah, I hope so. I think that's what everyone's appealing, but I don't know when that's gonna happen. But it'll be interesting to see when that happens.
Right. And I guess that was a damn good overview of what's going on in India economically. What do you I mean, I guess you already said you think Modi's going to win. That's probably what's going to happen.
Mhm, mhm.
Um I guess yeah, like we already kind of know what's going on. What's going to happen with those elections. Um
Yeah. I think the question is now like how much is he gonna win by, and if he wins, um, you know, also by the way, like the way how elections kind of work in India is a bit different, right? Like you don't vote on candidates, but you vote for the local candidate of your constituency, and like
mhm.
ideally they elect their own like leader. So I think that's how it's going to be for like the opposition, if the opposition was supposed to win, because it's just an alliance. Like it's BJP, which is Modi's party, and then an alliance of like plethora of other parties, and then among them they're going to be the ones like later we don't know who's going to really stand out as the prime minister candidate. But so I think that's also like creates a confusion. I think people have some idea, but generally people think it's going to be Rahul Gandhi. People think there's a leader called Mamta Banerjee, like she might have a chance. But
They're probably
yeah, I think
nervous.
there will be some interesting things too that'll come out of it, depending on how what margin Modi wins by. It'll determine how dominant essentially BJP, his party, and he's going to be for India for like the next like few years, I would say at this point. Yeah.
Okay. Also, we have one more question in the chat. What is I'm not sure I understand this. What is the external debt situation for India?
Yeah. So if you look at it, right, I think that was a great question because if you just open up, if you actually open up the Bloom thing, or if you just Google it, actually, right, if you don't mind me, if you don't mind just Googling
Yeah.
India debt to GDP ratio. So that's another argument that they've been making, which is that hey, like our debt to GDP ratio is not that bad compared to like the other countries currently, which are rated better than them. Uh, Obviously US included.
Damn, bro. Look at Japan.
Yeah. Japan, Greece, these guys have been reeling in debt for quite a bit.
These guys are
Uh,
champions. I mean, the US is also not too far off. It's 115. So basically, yeah, like
yeah,
from Italy and up, these countries are above 100% of GDP in terms of debt, which is nuts. So yeah, India's doing pretty well, like in terms of that.
even when you look at China, right? Even when you look at China,
Yeah, even China's
uh,
is much higher. I thought I saw it up here.
but that's okay. I think that's okay. I don't know, like some people might like correct me here if I'm wrong, but I think that's okay to have like a higher debt for China because it's like it's usually like productive debt. I don't know what the right word is, but it's like essentially a good debt, because they're like investing in terms of their infrastructure. They're not really like
Yeah, like it's that leads to a bit more dollars like later on.
uh yeah, yeah, higher productivity essentially,
Yeah.
right?
Okay. Yeah, and also
Rather than other
China has 71% of GDP
yeah, yeah.
compared to
So
India's 52. Yeah, which is it's insane. Like you guys are basically just doing half of like your GDP, which is
yeah.
you guys
I
could be doing
think
a lot more basically.
I think it increased until like the last 2 years or something like that. I don't know what since what year this number is, but it's like it's definitely like less than like 100%. I think fiscal deficit is what they sort of call out these credit rating agencies, which is I think it was higher post COVID, but then since COVID, our fiscal deficit has been improving, which is again a case for people to be like, hey, give us better ratings.
It's funny, you can see all the the top like Gulf states like down here. I guess they don't have a lot of debt because they have so much money. That makes sense.
Yeah, all that cash, right?
All that oil money.
Yeah,
Um,
yeah.
yeah. All right, dude. Well, is there anything else that you want to enlighten us about India, or I think, or is that what you had in store for us?
No, I think this is pretty much kind of what I, wanted to cover. If there's any other questions in the chat, let me know. Uh,
No, yeah, like definitely thank you, Kush, for enlightening us about India a little bit more for those that don't know. Definitely long India. I would say
yeah, yeah,
bullish
yeah.
on it,
Hopefully.
but bullish on India, I would say.
Yeah,
Eh.
one caveat that I would definitely point out is
Mm-hmm.
because of India's population, I think I would still be urgent in terms of how the window is because, only a fraction of, some fraction of the group of the younger population, right? Which is what India, sort of poses as its strength. They need to have more skill development, right? They need to be employed, right? And like so in the next few years I think India has to like play that card very well, because India, if it doesn't, right, if something goes awry, you might see a situation where India will be a country with the largest number of unemployed or possibly uneducated group of like people just like living there. So I think it's going to be very key to have this like country succeed, just because if this country succeeds, then like few hundreds of millions people are gonna like have a better life in a way. So we'll see how that sort of works out.
By the way,